Hello, hello, hello. Yes, it's me, Kenny Polcari, your host of the party, and this is the morning market commentary for Friday, July 30th. It is the final trading day of the month. And so what happened yesterday? Oh, so much to talk about with Robinhood and hoodwinking all of the investors, both institutional and retail. So I wasn't really wrong a month ago after they picked Hood for their symbol, and I said it should be hoodwinked because that's exactly what's going to happen. So what do you need to know? Besides Robinhood hoodwinking everybody, Amazon reported after the bell last night. They beat on the top line, yet they disappointed in the same report. Pinterest also is losing users, and that caused traders to hit the sell button in the after hours segment. Global markets are all lower today on the final day of trading in July. Economic data yesterday supports Jay's narrative. Or does it, right? And so what are we having for dinner? We're going to try the flank steak. More on that later. So let's make something very clear. The Wall Street Journal ran with a front page story this morning featuring Vlad and Baiju walking down Wall Street, approaching the famed corner of the where the Buttonwood tree once stood. Hands in their pockets, hair's a mess, no ties, one of them in a blue suit, the other one is a celery green suit. All very nice. But the image could not have been further from the truth, and the Wall Street Journal editorial staff should know better. Even they hoodwinked you. You see, Robinhood stumbled on its debut in Times Square. And I say that because Robinhood chose the NASDAQ as its market center of choice, and that market center is not the famed New York Stock Exchange on the corner of Wall and Broad Street, the one that everyone thinks about when they think of U.S. capitalism. NASDAQ is at the center of Times Square on 42nd and Broadway, known more for the annual New Year's Eve ball drop and the drama surrounding the theater rather than the drama surrounding stock trading. But yesterday, it was in fact a different story. Broadway, while still closed, not a light on, no feet dancing, no one singing, yet there was plenty of drama. Robinhood, which priced their IPO at the bottom of the range, $38 a share, was set to launch. Goldman, the lead investment banker, trying desperately to create a dramatic day. You see, by pricing the IPO at what was the low end of the range and keeping 35% of the deal out of institutional hands, keeping it for all the Reddit traders and the ambitious retail clients, they made a bet. And the bet was that this would guarantee a pop that they hope would be in the range of 40 to 50% on the opening. And that would have created more excitement and drama. Oh boy. Did they not understand the marketplace? Did they not understand the lack of institutional interest at best? Did they completely misjudge the Reddit and retail demand? Apparently so. You see, the deal opened in the early afternoon at 12:24 p.m. at the deal price of $38, not a penny more. And that, in fact, was supported by Goldman. In the same minute, because had they not been there, it would have opened lower. In the same minute, it popped to 40 and a quarter, and then it collapsed, falling to 33.35 by 12:43 p.m., and then the rest was history. It struggled as Goldman tried desperately to change the tone of the music. Jimmy Cramer discussing the brilliance and fortitude of Vlad and Baiju, all in an attempt to turn it around. How'd that work out? Vlad also telling Jimmy that he's not worried that the IPO was a disaster because he's building a business. Did you expect him really to say anything different? What did you think he was going to say? By the end of the day, the stock lost 8.4%, closing at $34.82 a share. So much for those diamond hands. Okay, but look, understand something. Robinhood does not represent the market at all, and stocks represented by the broader indexes ended the day higher. Early morning economic data driving the move, right? Second quarter GDP rising only by 6.5%, well below the expected 8.5%. Initial jobless claims rising to better than 400,000. Continuing claims rising to 3.2 million. Pending home sales month over month falling 2%, while year over year sales were down 3.3%. The data all weaker. And that made Jay Powell look like a brain surgeon. The data affirming the concerns that Jay and the Fed expressed on Wednesday that while we're making progress, we aren't there yet. And investors went all in. Why? Because the chatter yesterday was all about how the Fed must now remain committed to its current course. Stimulus to continue at $120 billion a month and rates to remain low forever. Just And the talk of tapering is just that. It's talk. It's not changing anytime soon. And so it goes. By the closing bell, the Dow added 154 points, or 0.5%. The S&P gained 18, or 0.4%. The Nasdaq up 15 points, or tenth of a percent. The Russell up 15 points, or 0.7%, while the transports gained 114 points, or 0.8%. The focus shifting back to the cyclical, value-oriented trade. Financials up 1.1%, energy up 1%, basic materials up 1.1%. The S&P value trade up 0.7%, while growth was only up 0.2%. But there is confusion. You see, the personal consumption component of GDP surged by 11.8%, well above the expected 10.5%. And that suggests that the recovery remains intact despite all the recent chatter surrounding the Delta variant of COVID. And this implies it's all good. And that smacks directly in the face of Jay Powell. So what did investors do? They just bought everything. This way they can't lose. Something they own must win. And so it was. The markets ended higher. Then there was all the tension all day long surrounding what Amazon was going to say, and to a lesser extent, what Pinterest was going to say. Both reporting after the bell. And during the regular session, Amazon lost 0.8%, while Pins lost 5% ahead of the announcements. And then it hit. And while Amazon reported another tremendous quarter, posting their third $100 billion quarter in a row, beating earnings per share by 23%, reporting $15.12 a share versus the expected $12.30 a share. Not bad, right? Annual revenue up 27%, not bad, but not good when you consider that the second quarter of 2020 saw revenues up 41%. I mean, kaish? CFO Brian Olsavsky whining on the conference call, blaming it on a tough year-over-year comparison. They went on to say that the third quarter would see sales between 106 and 112 billion, a wide guess, but below the consensus estimate of 120 billion, and that's all traders needed to hear. And boom, down it goes in the after-hours session, falling 6.4% or $230 a share. And this morning it's quoted at 33.57, 33.60. Pinterest got whacked even more as the trader types marched out the door on their story. They are losing users. That's all they needed to hear. The stock down 20.8% or $15 a share in the after-hours session. And this morning is quoted at 57.70, 57.80. And this morning, U.S. futures are down on the last day of July. Dow futures off 100 points. S&P's off 30. NASDAQ down 161. Russell off by 10. 10-year yields at 1.24%. The VIX is up 7% at 19 as darkness turns to light. Lots of chatter about Robinhood and Amazon and how investment bankers and analysts could have had it so wrong. And do these three events itself raise the possibility that we're at a market top? No. While it's all very dramatic and it gives the media something to discuss, these three events may be a reason for today's weakness, but let's not kid ourselves. Valuations are rich. Monetary policy can't go on unchecked. 10-year and 30-year rates are expected to be higher at year-end. The COVID variant is also expected to force the government to mandate masks again for everyone, vaccinated or not. And that's sure to create a lot of chatter and accusations about the vaccine and my body, my choice. And we're about to enter just as we're about to enter the danger zone, which is the seasonally weak time of year that happens every August through October. And then don't forget, members of the Fed are now free to talk to the media. So we're going to start to hear conflicting points of view, just as we did post the last meeting. So get ready, because you're going to hear lots of balloons being floated as they test the markets. And let me remind you, that is no reason to jump ship, but it is a reason to look at your portfolio, talk to your advisor, stick to the plan. Don't panic, and look for the opportunities that are about to be created. Ecodata today includes personal income of negative 0.3%, personal spending of plus 0.7%, which would go in line with yesterday's report, and real personal spending of 0.3%. I never really understood what's the difference between personal spending and real personal spending. Seems a bit ridiculous to me, but in any event, they do separate them. But if these numbers disappoint, it's only going to add to the negative story. And speaking of that, you can expect to hear more about the variant that's now going to be a headwind. Recall how we pointed out on Tuesday that while it's out there, many thought that it might become an issue in the future, which just meant it will become an issue when they need to accentuate the negatives. And today may be that reason. Earnings today include Chevron, which they beat. Aon, they beat. Caterpillar beat. Procter & Gamble beat, along with a host of others. All those earnings came out very early this morning. They all beat across all lines. Asian markets ended the day lower by about 1.2%. European markets are all down about 0.75% to 1% on earnings worries and new data surrounding the virus and what that's going to do to the travel and leisure industries. Think hotels, cruises, airlines, etc. There's no economic data in Europe today to consider, so it's going to be all about earnings and the variant. Bitcoin's trading at 38,000, down a little bit. Ethereum's trading at 2,300, kind of flat. The S&P closed at 44.19. And if the weakness holds, we're going to test 4,400 again on the opening. If we follow in the footsteps of the other developed markets, we could see losses today of about 1% across the board. And while the trend line does provide room for further upside, we talked about this, it feels a bit tired right here. With earnings season winding down, August tends to be quiet, down a bit, and then we enter the fall season, which also tends to be seasonally weak and volatile, even under the most normal circumstances. In any event, it is the end of the month, the last trading day, so not surprised to see weakness after a strong month. They do some portfolio rebalancing, window dressing, all that stuff. It's no reason to think that this is the beginning of the end, but the virus variants do remain a risk for the markets, especially as we come into the fall, which tends to be weak on its own. I'm still thinking we get this 7 to 10% correction over the next 2 or 3 months. In any event, stick to the plan. Remember, investing is dynamic. Keep some cash ready to deploy, but don't be so quick on the trigger yet. Now, you know what you can do? I keep telling you this. You can text the word invest to 21,000 on your mobile phone. You'll get my digital business card downloaded right to your phone. It's got all my contact information, my number, my email, my web address, all that stuff. So feel free to reach out, call me, write to me, text me. I'm happy to discuss the market, the plan, whatever's on your mind. You can also find me on Twitter, and my handle is just my name, @KennyPolcari, and obviously on this YouTube, which you're watching, also @KennyPolcari. So what are we having for dinner tonight? This is such a great dish, not complicated yet and not difficult yet. Your company's going to think you spent all day, right? It's a pan-seared flank steak with a red wine shallot sauce reduction. It's easy to make. It presents beautifully. And everyone's going to think, right, you spent so much time. For this, you're going to need the flank steak. You need butter, garlic, salt and pepper, red wine. Not a really heavy one, like a Chianti works. Shallots, balsamic vinegar. You need a good thick one for that, and some olive oil. You're going to preheat your oven to 400 degrees. This way it's ready when you need it. You're going to begin by melting the stick of butter. You're going to season the steak with salt and pepper. And you're going to take the chopped garlic and you're going to massage it all into the steak, right? Now you're going to pour the melted butter over the meat, right? You're going to melt the butter, let it cool. Then you're going to take, after you season it, pour the butter over the meat, massage it all in, and then cover it, let it rest. In a small pan, you're going to melt more butter, maybe like a half a stick, and some olive oil. This way the butter doesn't burn, right? Toss in the sliced shallots, 4 or 5 shallots. Saute for 5 minutes or so. Now add in 3/4 cup of the red wine and 2 tablespoons of a nice, thick balsamic vinegar. Bring it to a boil and then turn it to simmer. Reduce it by half. It's only going to take a couple of minutes. You're going to turn off the heat, and then you're going to whisk in 1 more tablespoon of butter. I mean, look, I hear you. Trust me, it's so delicious. In a large skillet, you're going to add a touch of olive oil, and you're going to heat it up. When it's ready and it's nice and sizzling hot, you want to add the flank steak to the pan and sear it on both sides, 3 to 4 minutes per side, that's all. Now remove it, put it in a Pyrex dish, and put it in the oven for 5 to 8 minutes. Now, depending on its thickness, right? If it's thicker, it's a little bit longer. If it's thinner, a little bit less. Remove and then cover it. Let it rest for another 5 minutes after you take it out. Prepare to serve this on a platter, like maybe put down some fresh kale. You're going to slice the steak across the grain and arrange it on the platter on top of the kale, right? So it looks beautiful. Now you're going to take the red wine shallot sauce. You're going to take a spoon. You're going to spoon it all over the flank steak. You're going to serve this dish with smashed roasted potatoes and a large mixed salad. You're going to have your red wine. The one you use to cook with is going to be the one that you should use to have with dinner, right? Because it'll complement each other. This, like I said, is a great dish. It's easy to make. Your guests are going to think you slaved over it for hours and hours, but shh, don't tell them. It's not that difficult. In any event, the day's about to get started. Take good care. Have a great weekend, and I'll see you on Monday.